Leverage in real estate refers to the use of borrowed funds or financing to increase the potential return on an investment in a property. Real estate investors often use leverage to purchase properties by obtaining a mortgage loan from a bank or other lender. By putting down a smaller amount of your own money as a down payment, you are able to control a larger asset and potentially realize a higher return on investment or ROI than you would have been able to achieve with your own funds. Leverage can magnify gains in a rising market, but it can also magnify losses in a declining market. In this video, we'll explore an overview of leverage in real estate, the advantages of leverage in real estate, the disadvantages that come with using leverage in real estate deals, and the important factors to know before considering the use of leverage for buying investment properties. By the end of this video, you will have a better understanding of the pros and cons of leverage in real estate investing. If you are ready, we begin with an overview of leverage in real estate investing. And later in this video, we will examine its advantages and disadvantages. In banking and finance, leverage refers to the use of borrowed funds or financial instruments to increase potential returns on an investment or to finance business operations. Leverage is commonly used in banking and finance to increase the returns on investments or to acquire assets that would otherwise be unaffordable with just the investor's own funds. This can be accomplished through borrowing money from a bank or issuing debt securities such as bonds, notes, or commercial paper. By using borrowed funds, an investor can increase the size of their investment and potentially earn a higher return. Leverage can also be used to finance a company's operations, such as through the use of short-term loans, lines of credit, or issuing commercial paper. By borrowing funds to finance operations, a company can maintain its liquidity and continue to invest in growth opportunities, even if it does not have sufficient cash on hand. Now, you may ask how leverage relates to property investing. Well, one of the most important elements in the success of a real estate investing business is having access to funds in order to acquire new properties and grow. Most investors don't use their own cash to buy property. That's where the leverage comes into play. One of the main reasons why real estate investors use leverage is to increase their potential return on investment. By using borrowed funds to purchase a property, an investor can control a larger asset than they would have been able to with their own funds. If the value of the property increases over time, the investor will have a higher return on their investment than if they had purchased the property with their own funds. Now, let's explore the pros of using leverage when investing in real estate. The first potential advantage for investors is amplified returns. One of the main advantages of using leverage is that it allows investors to amplify their returns by investing in larger properties or portfolios than they could afford with their own cash. By using leverage, investors can potentially earn a higher ROI than they would have with a smaller investment. The second advantage is diversification. By using leverage, investors can potentially diversify their real estate portfolio by investing in multiple properties or markets. This can help to reduce risk by spreading investments across different asset classes, geographic locations, and property types. And finally, the third advantage is tax benefits. In some cases, the interest paid on the borrowed money used for real estate investing may be tax deductible. This can help to reduce the overall tax liability of the investor and increase their after-tax returns. Now that we talked about the pros, why don't we explore the cons of using leverage when investing in real estate? The top one that comes to mind is risk of default. One of the biggest risks of using leverage is the risk of default. If the real estate investment does not perform as expected or if interest rates rise significantly, the investor may not be able to make the required mortgage payments. This can lead to foreclosure and the loss of the property and the invested capital. The second disadvantage is interest rate risk. Another significant risk of using leverage is interest rate risk. If interest rates rise, the cost of borrowing will increase, which can lead to higher mortgage payments and a decrease in the investor's ROI. The third disadvantage is asset value risk. Real estate investments can be affected by changes in the local real estate market, such as shifts in demand, supply, and competition. If property values decline significantly, the investor may experience a loss on their investment, which can be amplified if they are using leverage. And finally, the fourth and last main potential disadvantage is liquidity risk. Real estate investments can be relatively illiquid, which means that it can be difficult to sell the property quickly if needed. This can be a problem if the investor needs to generate cash quickly to cover unexpected expenses or to take advantage of other investment opportunities. We explored the pros and cons of investing with leverage in real estate. Overall, while the use of leverage in real estate investing can potentially amplify returns, it also comes with significant risks. You should carefully consider the risks and rewards of using leverage before making any investment decisions and ensure you have a solid financial plan in place to mitigate those risks. It is important to work with a financial advisor, attorney, or real estate professional to assess the potential risks and returns of any investment and to develop an investment strategy that aligns with your goals and risk tolerance. If you use too much leverage and take on too much debt, you may struggle to make mortgage payments if the property does not perform as expected, or if interest rates rise. This could lead to default and the loss of the property and invested capital. Alright, let's summarize what you learned in this video. In this video, you learned about leverage in purchasing real estate, the advantages of leverage in real estate, the disadvantages that come with using leverage in real estate deals, and the important factors to know before considering the use of leverage for buying investment properties. Thanks for watching.